Hello and welcome to gotstockz. Today is Wednesday, April 2nd, 2025. We're going to take a look at the SPY, the SPY, which is a S&P 500 ETF trust that covers the S&P 500. I respect and appreciate your time, so let's get right into it. We're looking at the SPY, the SPY. That's the ticker symbol, so type that into your brokerage firm and you're off to the races. Here's the top 10 holdings: Apple, Nvidia, Microsoft, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Google, Tesla. Now that's Google A and B shares. Now let's take a look at the sector weightings. You have the technology has 32%, the financial services is 14%, healthcare 10%, consumer cyclical 10.6%, communication services is 9.4%, industrials 7.3%, consumer defensive is 5.87%, energy is 3.3%, utilities is 2.5%, real estate is 2.1%, basic materials is 1.75%. So essentially you're covering a broad base of sectors in your portfolio. This is the top 10. But you're investing in 500 companies. Now keep in mind, these companies have to qualify to be into this elite group. Technology marches on and they fall off and they don't stay up with the times and they don't produce the numbers. Well, eventually they get kicked out of the S&P, and then the new kids on the block, they get put in there. As time goes on, this will always stay an elite group, and it's very hard for hedge fund managers and for market specialists and financial institutions to outperform the S&P 500. Let's get into the charts. This chart is a 5-year weekly chart. So each candle represents 1 week. 5-year low is 248.17. The 5-year high is 613.23. As you can see, went up, and then in 2022, we went into a 10-month bear market. And towards the end of 2022, we snapped out of that. And we've been in a bullish phase for the past couple of years. But this is the important reason why that you want to stay in the market all the time, and you want a dollar cost average into the market on a weekly, bi-weekly, and a monthly basis, so you can buy the market highs, the lows, your dollar cost averaging, you're reinvesting your dividends, and over the long haul, this is how you build your portfolio for long-term portfolios. Trading, that's a whole different animal, that's a whole different conversation. Let's get a little more granular and get a little closer to see what are some good opportunities to buy into this market. We are currently looking at a 1-year daily chart, so each candle represents 1 day. We've cleaned the chart up, so we're going to show you some support and resistance areas. We are currently looking at a 1-year daily chart. Each candle represents 1 day. We're going to set some support and resistance areas and take a look at some moving averages to see when are some good times to get into this market. When you're setting support and resistance areas, what you want to look at are peaks and pivotal areas where the market changed direction, and that will supply you typically with a support or a resistance area. So now we're going to add some moving averages. I've got the setting up here. So these moving averages that I have set up, the 10-day is the white line, the 21-day is the purple line, the green line is our 50-day, the orange line is our 100-day, the red line is the 200-day, and the teal color is going to be our 300-day moving average. Typically in a bull market, the market will follow its 10, 21, and 50-day moving average, occasionally breach it, but it's going to follow that uptrend and stay within those moving averages. And then when we go into a correction phase or a bear market, then all bets are off, and technical analysis is a little more challenging to follow because it will breach the 10, 21, 50, 100, 200 day, and it moved all the way down to the 300, and that's where it's currently at. Can it go a lot lower? Absolutely, it certainly can. Technical analysis is going to help you with your percentages of possibilities, which is going to increase your percentages of probabilities, which is going to ultimately be more profitable. Your profitability is going to increase. And the key to success in this industry is managing your risk. We are currently looking at the most recent downdraft. All the way there's your 200 and came down and touched the 300-day moving average. Had a nice little bounce, and we've been in a nice retracement period again. If you take a look at Friday, we had a big sell-off, but if you look at the volume, was light. And if you take a look, there's Monday, Tuesday, and today is Wednesday. We had a nice little bounce off of the 300-day moving average. The volume increased on Monday, so that's a good telltale of a turnaround signal. Me and my long-term portfolio, I've been buying in this entire area. Sometimes you're going to take a little bit of heat. That's why dollar cost averaging is the best way to invest in a long-term portfolio, because you're buying at the highs, you're buying at the lows, you're reinvesting your dividends, dollar cost averaging, and over time, this is going to be a very lucrative proposition for you. Appreciate the support. Please follow us on TikTok. Also, be careful. The market's very risky. Dot your I's, cross your T's, and don't forget the Z. God bless and happy investing. Subscribe. The subscribe button. Come on.